The crypto markets just made another gut-wrenching fall below support, but that was very quickly bought up, and there is on-chain evidence showing that whale wallets are still accumulating, especially at these prices. Let's get into it. So look at this, $111,635. That is a pretty scary wick down to $108,500. But as expected, there was buy-side liquidity down there, and look how fast we bounced up. I'm on a 15-minute time frame right now, and you can see that is all wick. So we lost the floor of support at about 110,000, which isn't great, but I'm still confident about the way that we ripped up from there, okay? This was a very, very fast bounce, and now we're coming in to challenge some of those local highs at about $112,000. To the upside, I'm still looking at this region here, about 113,500. If we take a look at the liquidations, we'll see once again, $121 million worth of longs liquidated in the last 4 hours. And that increases to about 150 million over the last 12 hours. So what just happened there in this wick is what we're so used to seeing. A load of people jumped in long with too much leverage. They couldn't quite stick out this position, and they were forced out of those trades, and they were forced to dump on the market, which caused a very sudden move to the downside. But that was eaten up so quickly. I remain confident in my long position, okay? We're still down, we're still underwater on this, 0.8 BTC. I'm currently down $2,400 on that trade. That is a 0.8 BTC position size at 10x leverage. Now, once again, I entered this in limit orders, or on limit orders that I placed in preparation for this move down, in anticipation that a move down was likely. And we got into that at an average price, averaged down a little the last couple of days to an average price of $114,600. Still sitting in that long. For this to play out, what we need to see is the eventual liquidation of these short positions. So right now you can see on the 1-day time frame, that little slip that we just experienced wiped out some of this long leverage, some more of this long leverage, which, by the way, is insane to me that there's still room for more long liquidations right now, because of course that massive down move over the weekend was driven almost entirely by that massive $19 billion long liquidation. People are still jumping in on too much leverage. There's still capital out there. There are still people punting this who don't really know what they're doing, because if they did, they wouldn't be getting liquidated like this. What I think is most interesting now is if we look at this from a broader perspective, this is very much shifting to short leverage, okay? The market is on the fear and greed index strongly in fear right now, okay? We're at 32 out of 100, and the liquidation risk just keeps flipping to that short side. We are due a flush out of some of the short leverage in this market, and you can see that if we zoom out to the 7-day profile, massively biased to the short side, and the 30-day profile massively biased towards the short side. But basically every time something like this happens, every time we get a slip, okay, and even as we stay ranging right from that down move, every day that we don't just rip to the upside, more and more people jump in on short positions. If price moves up eventually, they run the risk of being liquidated, and if those short positions start becoming liquidated, we could basically see a reversal of this type of move where stops get hit, people are forced out of those positions, and they become liquidated, and they're forced to buy onto the market. So that's what I'm looking at right now. Okay, I like the way that we bounced out of the lows there. Very, very fast move, very fast wick. Flushed out a little bit more long liquidation and immediately pushed back up. So an article here from Reuters talking about market participants hedging themselves for further moves down. Following the largest crypto liquidation in history last Friday, options market investors are bracing for more volatility and further declines in Bitcoin and Ether, aggressively positioning in trades that offer protection against another potential freefall. In Bitcoin, there were hefty purchases of puts conferring the right to sell Bitcoin at a strike price of $115,000 and $95,000 for the 31st of October expiry. According to Dawson, there was also a sharp reversal from call buying to call selling at 125,000 strike for October 17 expiry. So this basically means on the options market, participants are hedging themselves and preparing for further downside action. But something else that I think is pretty interesting is on-chain data about the increase in accumulation wallets. So look at this, 3 million BTC and counting, the silent confidence of Bitcoin holders. Take a deep breath and look at the bigger picture. The total BTC held in Bitcoin accumulation addresses is now nearing 3 million coins. Now, accumulation addresses are defined as addresses that buy Bitcoin and don't sell Bitcoin. These are the ultimate hodlers, if you will. Plays into a theory that I floated yesterday. Right, that big insider trading wallet which shorted and front-run Trump's announcement of the tariffs on Friday and shorted the market to a $200 million win, exited that position for nearly $200 million in profit, and they got short again yesterday or the day before. Now, I have a theory that they may potentially be in that public short position purely for the purpose of scaring the market, of keeping prices suppressed by displaying that big short position so that whoever's really behind this has the opportunity to accumulate more Bitcoin at these lower prices. These are big whale wallets that don't sell Bitcoins, are accumulating. People are still buying into this dip. That's why I remain confident in my longs right now. Okay, I'm not married to these positions. If we slip further from here, I still think that's going to be a good buying opportunity. I don't necessarily want to hold this all the way through another slip, but the way the market is reacting to lows makes me more confident in these positions. I do want to see now how we start reacting to prices to the upside. And of course, as always, I'm going to be watching the liquidation reaction to that very closely indeed. So just to get a quick bead on that, if we look at local highs, $112,000, we'll say on the liquidation map, that puts us at something like $87 million worth of short liquidation risk, which is not insignificant at all. But as always, that's just what I'm looking at, purely my opinion. I'm sharing it just for entertainment purposes. Thank you so much for listening. There's plenty more to come.